What's going on, guys? Sam Norris here, the property investors broker. I've been getting a ton of questions about, well, I don't like calling them this, but mortgage payment holidays. And obviously this has been throughout lockdown. Mortgage payment holidays, especially amongst the property investor community, have been a pretty big issue, contentious issue, question point, whatever you want to call it. And I think the reason for that has changed throughout the last sort of couple of months. And more recently, the question has been less around how do they work, what do I do, to should I have them, are they going to negatively impact my sort of long-term investment business effectively. So I thought I thought I'd do a little video, go right back to the start and sort of go through things chronologically and talk through these payment holidays, or payment deferrals as I prefer to call them. So pretty hot off the bat once lockdown started, there was the announcement that if you needed to take a payment holiday from your monthly mortgage payments, that is something that across the board lenders were going to allow. And people in droves got in touch. These were, I think, first and foremost were for the residential mortgage community, mortgage market, where people maybe had lost jobs or their income had suffered, and as a result, it was going to impact their livelihood or their ability to live normal lives, to have this mortgage payment hanging over their head. This quickly seeped into the buy-to-let and investor part of the market, because what was happening at the same time was that tenants were requesting rental holidays, and therefore, the burden then fell on buy-to-let investors to have to make their monthly payments when they weren't getting those covered by the rent. And so this led to a lot of people in the buy-to-let and investor community taking out these payment holidays as well. However, a lot of people, I think, also took out these payment holidays even when they didn't need to do so. And these have been conversations I've been having quite readily recently with a number of different clients. And this all seems to be because we were being told at the outset this was really going to have no negative impact on, firstly, your credit file, and secondly, your ability to pay, to get more mortgages and finance, etc., as things sort of wore on. They weren't being looked at as defaults and that kind of stuff. So lots of people in droves went and took out these mortgage payment holidays. Now, fast forward a few weeks, and what started to transpire is the impact of these types of these payment holidays is actually maybe not as maybe a little bit more negative than we first thought. I first came up against an issue when a client of mine called me and said that they had taken out a payment holiday with one property within their portfolio, and that mortgage was with a certain lender. They then wanted to refinance, and what the struggle that we had was that the best option was this same lender. This lender declined the new application based on the fact that they had an existing payment holiday outstanding on one of their own loans, one of their own mortgages. And so, I had a long in-depth conversation with this particular lender, and to me, it actually kind of made perfect sense, because if you think about it, you're asking for more money, you're asking for more lending. However, at the moment, you've already contacted that same lender on an existing property that you've got mortgaged with them that says, I can't afford to pay you this money. So if you can't afford to pay them, you represent a risk, and therefore you're not, they're going to be less inclined to actually be able to give you the money that you want on this new application. So it kind of made sense to me, And so then I started to have more and more conversations with more and more lenders and started to really get into the potential impact of these. And so now we're seeing lenders are adding to their application forms saying, we want to know if you have you have to basically tick kind of boxes, say, I have taken out payment holidays, I still have payment holidays outstanding, I am planning on taking payment holidays. So obviously this is having a little bit of a wider impact than was first kind of, I suppose, touted in the press and our sort of industry media. And so, that story that I told you previously was just one individual lender. And I think what we're starting to see now is that this is having a wider impact lender to lender. So having, say, 5 properties in your portfolio, all of which you've got payment holidays on, is that going to impact you getting another mortgage? I think the answer to that is yes, unfortunately. So what should you do? The advice that I'm giving to people is, if you don't need these loans, if you don't need these payment holidays, get back on the phone to your lenders ASAP and tell them that you no longer need any payment holidays. So that's one tick in the box, because I think if we make the comparison to, say, like a credit card mispayment or default, if you are still not making payments, that's worse than you were not making payments. So first of all, let's stop the rot. And let's start making those payments again, and get in touch with all of your lenders and tell them that you want to start again. The next thing is that you are still going to be behind on your payments, essentially. So from a new lender's perspective, yes, this isn't going to have as big an impact as if you still have these holidays outstanding, or if you're still taking payment holidays. But I still think it's going to have a negative impact potentially. It's maybe not going to be as serious as other things, but certainly, you know, on an application form, any liabilities that you have need to be addressed, and especially if there's sort of missed payments and things like that. Lenders might incorporate these payment holidays into that sort of application form. So we need to just be a bit wary of that. So the next thing, once you've stopped your payment holidays and you're starting to make your monthly payments again, the next thing we want to be doing is getting back up to date with those payments. So if you've had, say, 2 months worth of payment holiday, pay that 2 months back, get back up to date, and speak to your lenders about how you can do that. Because once you are all up to date, it's a bit like damage limitation. Look, this is going to be on the record that you were taking payment holidays during this time. Your credit file is going to represent that if you're on interest-only mortgage, for example, and you've got 150 grand outstanding, for 2 months that didn't, you know, that it's going to show 0, it's going to show the balance, and then it's going to show no payment was made underneath. So it's something that's really, really important, I think, to get that back showing as paid, because, yeah, like I said, this is sort of damage limitation. You can't go back in time and erase it. You can't go back in time and not take these payment holidays in the first place, but what you can do is put a stop to them. So it's damage limitation. Now, for those of you that follow me, you know that my videos try to be as positive as possible. I'm a very glass half full kind of person, and this video seems to me as if it's a little bit, you know, it's quite negative, really. I don't want it to come across like that. You know, I'm giving my thoughts on what the market is telling me, and it's telling me that maybe quite a few people potentially made a bit of an error in judgment in jumping the gun and taking out these payment holidays a bit too early when they weren't needed. Look, if you've got half a dozen properties and none of your tenants are paying, you know, you're in the category where you need them. Just don't expect to have a huge amount of options available to you if you want to expand your portfolio in the next month or two. So, but if you don't need to take them out, or you haven't needed to take them out, then I think the time has come for you to get back on top of things and get things back to normal, because otherwise it is going to have a bit of an impact. So look, that's just my 2p's worth on what's going on with these payment holidays at the moment, the implications that it's going to have to future borrowing. I do think it's going to have a negative impact, unfortunately, on future borrowing, but by, you know, stopping the rot, by having that damage limitation, going back to your lenders, starting your payments again as of this month or next month, that's going to, at least, like I say, it's going to be damage limitation, and that should mean that the impact on future borrowing should be you know, as little as possible. So look, hopefully this has been really helpful for you. If it has, please do get in touch. If it hasn't, do get in touch. Follow me on Instagram at the Sam Norris, on Twitter at the Sam Norris, on YouTube. You can subscribe to my channel, search Sam Norris, the Property Investors Broker, and obviously on Facebook and LinkedIn, search my name and you'll be able to find me on there as well. But look, let me know if you've been having any issues with your with payment holidays. If you've got any questions regarding payment holidays, drop them in the comments, and I will come back to you and answer your questions as best as I possibly can. But look, whatever you're doing this week, do it well, and I'll catch up with you on the next video. Cheers.